Hey, thanks for joining in today. We're going to dig deep into the Bollinger Band technical analysis tool today. The Bollinger Band was really developed by a guy named John Bollinger in the 1980s. It has become very successful as many traders have been using this tool, and it has delivered very good results for traders right across the globe. So, the Bollinger Band reflects price volatility, and we're going to be looking at this in a lot more details with the charts to come. So bear with us as we move to the next slide and look at the charts. And we're going to be looking at Bitcoin and see what happened with Bitcoin over a period of time. So here we have the Bitcoin chart over the last 12 months. And what we have imposed on the Bitcoin chart is a Bollinger Band. And the Bollinger Band, as we have said before, has three lines. On the outer band, it is called the upper band. That is two standard deviation away from the 20-day SMA. And the 20-day SMA is the simple moving average for the last 20 days of price action for this. It's a coin, a cryptocurrency, Bitcoin. So below that, you have the lower band, which is two standard deviation below the 20-day average. So pretty quickly, we're describing those three lines very importantly, and you have to note this and understand the practicality of what I'm going to say now, is that two standard deviation means that this Bollinger Band is taking into consideration 95% of the price action, which is a very good reflection of the price movement and the price volatility. And so that is the reason why a lot of traders are using this Bollinger Band. And guess what? You can increase the standard deviation to three as well. Whatever works for you, you can decide. But two standard deviation is the norm, and that is what is used right across the planet. As we continue to focus on the Bollinger Band, we're going to be looking at volatility with this Bitcoin chart over the last 12 months. And if you look to the left side of the chart, you have us identifying an area of low volatility, and it's reflecting the price movements within that rectangular box there. And we can note that the price movement is very tame, not a lot of activity in terms of swings, very narrow movements, very narrow swings. And that is why we are saying that the price movement in that area has low volatility. And it's very evident by just looking at it. On the other hand, on the right side of the chart, you see what is labeled as high volatility. And there you see price movement a lot more volatile, and it's having wide swings or wide movements, a lot more aggressive movements between the band, the upper band and the lower band. And there you can say, hey, the price are extreme, the swings are aggressive, and the price movement is volatile. And that is something that we have to know, where the price is moving from the upper band to the 20-day moving average, and then also to the lower band. And here we see a lot of activity taking place, wide swings, and these are where opportunities exist for traders to make trades on the outer bands and make great profits. And this is what the Bollinger Band does for us as traders and profit makers. So, in utilizing the Bollinger Band for trades and trade decisions, there are several ways that different traders use. Some use the RSI in conjunction to the Bollinger Band. Some use mean reversion. For me, I basically stick with the trend analysis and trading the trend in my Bollinger Band trades. And it's a pretty simple saying that the trend is your friend. And I stick with this, it works for me. Whatever works for you as you do your research and you learn a lot more about the Bollinger Band and using other uh, indicators to make better decision. But for me, I use the trend analysis. And in this chart, I've drawn a line, a trend line, which is as you see, a upward trend line, and I've identified the areas where I would buy Bitcoin. And if you see in those areas where the Bollinger Band is touching on the outer bands of the Bollinger Band, and those are signs and signals that the stock is ready to be bought in an upward trend. And so you can also use a candlestick. Once you see those bullish candlestick touching the the outer bands, you know it's a time to buy in an uptrend. That way, it's very difficult to make any mistakes once you're using the trend analysis and the trend technique to make your buying decision. And as I've shown you here, the Bitcoin over the last 12 months, you've seen I've come up with one, two, three, four different times that you could buy Bitcoin and make good money. And I also show you where you could sell. So make sure when you're buying, you identify those buying areas along the outer bands. And also you can use the candlestick, the Japanese candlestick, with those bullish upward movements to make your decision a lot more solid and more confident. And then you take your profits when the price moves to the outer bands again, and you look for it coming back to the lower bands and you go in again. So you, once you're studying your charts and looking at it properly and have an in-depth analysis, you can make very good decision using the upward trend analysis. So in quick summary, buying on the outer bands mean buying at the lower bands. And you see the trend line going up and the green buy signals right on the outer bands, which is definitely the lower bands that I'm referring to. And then when you're taking profits, you take profits on the upper bands. And you see those take profit signals as well. So make sure we do understand this. It's pretty simple, pretty straightforward. Keep with the trend. The trend is your friend. Conversely, and very quickly, I will go through a stock ticker, Illumina, which is now in a downward trend for the last 6 to 7 months. And you, as you have seen, I've drawn the trend line with a downward path, and the stock keeps going down. Now, at the top of the Bollinger bands, which is the outer or the upper bands, you can see I put the sell signs or the sell signals, which showing that you can either do a short sale if you're a short sale guy. Also, at the sell pointers and indicators there, you can sell what is called vertical calls, and at the same time you can also sell puts and take your profits at the lower bands where those prices are touching the outer bands, taking your profits and moving on to your next trade. All right, so let's wrap this up quickly, and we're going to be moving on to RSI and the moving averages later on. But I hope you enjoyed this video and you have learned something. Please subscribe to the channel. Please indicate your likes, and we will see you in the next video. Thank you so much.